Hi, and thank you for joining us today. Market developments in May saw some trend reversals across the fixed income and commodity space. On the one hand, bond yields fell on both sides of the Atlantic as the political crisis in Italy unfolded. And on the other hand, oil prices fell as Russia and OPEC are discussing an increase in oil production under the pressure of the US administration. Trend reversals on both asset classes impacted negatively the performance of some hedge fund strategies, and in particular macro and CTA strategies, which had built short positions on bonds and long positions on oil in commodities. On a positive note, bottom-up strategies fare relatively better. Long-short equity and event-driven funds delivered positive results for the month, despite turbulent market conditions in Europe and to a lower extent in Japan. Long-short equity funds proved highly resilient on the back of strong allocations to cyclical sectors such as IT, materials and industrials, and low exposures to sectors that underperform such as financials and utilities. Event-driven funds delivered also good results on the merger side due to the tightening of the deal spread between NXP Semiconductors and Qualcomm, and on the special situations side due to allocations to companies such as Tiffany and Facebook. Going forward, we maintain strong convictions on bottom-up strategies. Long-short equity appears well equipped to navigate turbulent market conditions, and we have a strong preference for strategies with a variable bias that can adjust their net exposure according to market conditions. Meanwhile, we maintain strong convictions on merger arbitrage in the context of the US fiscal reform and skyrocketing M&A activity in 2018. Overall, monetary tightening and the rise in bond yields that resumed early June have pushed higher the dispersion across stock returns both in the US and in Europe. This should prove supportive for hedge fund strategies focused on stock selection, such as long-short equity and event-driven. Thank you, and see you next month.